Hey, what's up, everybody? It is Wednesday, August 19th. So, the market gave up some of its gains today, and the averages ended lower. So, that's, I guess, to be expected. Look, I don't see anything in the fiscal flows that suggest any sort of a slowdown in terms of the amount of fiscal support. And if that's the case, I think the market will continue to go up until we reach some kind of really extreme bullish sentiment level. And I think that's going to be indicated when we finally see, for example, the AAII, that's the American Association of Individual Investors, their weekly survey flip from bearish to bullish. Now remember, those people surveyed, they've been bearish the whole entire year basically, or at least going back to March. They've been bearish like consistently. It doesn't matter that the market had been going up for all these months, and even recently with the NASDAQ making new highs and the economy opening up largely, they remained steadfastly bearish. And I think we're going to have to see those people flip to the bullish camp. Now that might happen very soon. It may have already happened. I mean, that survey comes out on Wednesday, so it comes out today, but it isn't released until late at night, so I'll see it early in the morning. I don't know, but I mean, we may be at that threshold right now, or it may take a few more weeks. Other than that, I mean, the monetary environment, the fiscal environment is very supportive. And you're going to have these market corrections, but I think that overall, we're going to continue to trend higher until, like I said, sentiment reaches an extreme, or we start to see a deceleration in the fiscal support. And as I mentioned, some of you have been saying, well, how come you flipped around on your position? Because, again, I was anticipating a fiscal cliff. I was talking about this already prior to mid-July. I said we're going to have tax payments, and then we're going to have the end of the $600 supplement, unemployment supplement, and I was anticipating a slowdown in that fiscal support. Indeed, I really thought we were going to see that start to contract relative to the growth that we had been seeing up until now, but it didn't happen. I mean, yes, I have seen the contraction in average daily unemployment benefit payouts. That is clear. I mean, that really does look like a cliff when you look at the chart. But overall spending is so big, it is offsetting that. And like I said in the last couple of videos, I mean, that's largely things like Medicare, Medicaid, all the meds. I mean, the virus and the illness is causing this growth in spending, and it's flowing to, like I said, a smaller and smaller segment of the economy. You've got the big mega cap stocks that are doing very, very well, like Amazon and Apple and Microsoft and Facebook, and now we saw Walmart, we saw Home Depot benefiting from the stay-at-home environment. So I mean, the money, which is unprecedented, this spending, which is unprecedented, is flowing to a smaller and smaller segment of the economy. But these are mega cap stocks, and they're dragging up the market averages. The other thing that is positive is that, and I spoke about this yesterday, personal savings at nearly 3.5 trillion. It was over 6 trillion, then we had to pay taxes. But even at 3.5 trillion, that is so far above anything historically in the past that we have seen. And it goes to show you that the government can really set people right if it wanted to. I mean, handing out those checks, out of thin air, I mean, that flowed to people's accounts. People who never had any really surplus in their accounts now find themselves flush. It's like a real-time laboratory of what we could have if policy were changed or made permanent in that fashion. Remember, this is all a political decision. Somebody asked me to talk about inflation. I think there is a risk of inflation with this amount of spending and the economy operating at a much lower level of output. All right, it's not so much about the spending, because if the spending equates to a higher product, in other words, a higher quantity of goods and services produced, then the price level doesn't necessarily go up. But if the economy is still partially in shutdown and we're operating at a lower capacity, but you have this unprecedented amount of income that's being pumped into the economy, then yes, I think we can have some inflation. The only thing I would caution is that interest rates are at zero. And remember, interest rates are, that's price setting. When the Fed raises rates, that raises the general level of prices because the cost of credit is reflected in the cost of all goods and services, and vice versa. When interest rates are very low and they're zero now, it's functionally setting the price level lower. So as long as the Fed stays at zero or near zero, it's hard to generate a lot of inflation, although I will say the other factor, which is the fiscal, the spending factor, and the lower level of output in the economy, that can produce an inflation. And I think that's also another reason why we have seen gold move up. And let me talk a little bit about gold today. It came off, but again, you got to buy these dips. We have seen commercials, producers in the gold market use every pullback as an opportunity to either lift their hedges or to buy. And that's very rare, but this has been ongoing for a long time. You know, the minute they start to reverse that, when I see them aggressively selling, I'll let you know, but I haven't seen that so far. Rally in the dollar today. I stick by my guns. You got to sell dollar rallies. Dollar is going lower. Remember, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. And let me remind you, I did post up the new podcast episode. It is available now. You could go to my website, also pitbulleconomics.com, and click on the tab that says podcast, or you can just click on the link right here in the description below. See everybody tomorrow. Bye.